Greetings, everyone. We welcome you to this webinar that's all about property and liability insurance. We are Better Money Decisions. We're a woman-owned financial planning firm, and we are here to cover the comprehensive needs of your financial life. I am Kathleen Connors. I'm an associate advisor with the firm, and joining me today is Richard Kaw, who is one of our senior wealth advisors. So just a brief overview of what we're covering today. It's property and casualty insurance, meaning everything that protects the value of your things, your home, your personal belongings, your cars, and also your money if you are ever sued. Now, in the field of property and casualty insurance, it's a state-regulated field. There are a lot of similarities depending on where you live in the nation, where most base policies are very similar, but there are some variations in there, and there are some possibilities for endorsements and riders, meaning we have some opportunities for some planning around insurance to try to keep your premiums down while keeping your coverage high.
I'm going to first touch on homeowners insurance. This is, again, as Kathleen mentioned, most homeowners policies are pretty similar in nature throughout the nation, but again, they are state regulated. But they generally cover these 5 categories. And the coverage is structured your dwelling, which is your home, all of your personal property, everything in your home. It will also cover any other structures. This may include a detached garage, a shed, any other building or structure that's on your property. Maybe it's a carport or something to that effect. Those are part of the coverage as well. Typically, these coverages also have what's referred to as a loss of use benefit. This just means if your home is not inhabitable due to damage, fire, flood, whatever, there is a provision to help provide you with alternative housing, and that's covered under here. There is a basis of liability coverage within all homeowners policies. It's typically the same in car. We're going to talk more at the end of this presentation about liability coverage, but pretty much all homeowners policies have some base of liability coverage. This is kind of the slip and fall type thing. Make sure someone doesn't sue you. There's also medical payments to others coverage in here. Now, this is kind of a fuzzy area between liability and medical payments. Keep in mind the medical payments are not for you. That's your personal health insurance. But the medical payments to others are more of a liability type feature. So this is kind of the basic sections you're going to see in all of your policies. Where we see planning opportunities is kind of what Kathleen mentioned, which is going to be the endorsements or riders. Also, we're going to be looking for things like cost amount. The first thing we always look for is what's referred to as replacement value. Whenever you purchase homeowners insurance, obviously the question is how much coverage do you get? There is a distinct difference between market value and rebuild cost of your home. What you could sell it for is not necessarily what it might cost to rebuild. This kind of became very important. You know, if you remember post-COVID, we saw a significant spike in building materials, just a supply and demand type structure where we saw issues here. So it's important for your policy to have what we would refer to as a replacement value coverage. Again, this is not so much based upon your market value, but what it would cost to rebuild your home. Related to this is an inflationary rider. You may pick a value for your property or rebuild cost, but over time, this may change significantly. So these 2 features, as far as looking at rebuild cost and inflation rider, are something that we would look for right off the bat in your policy. Another item is water backup. This is different than flood insurance. And this, I don't want to say it's only for people who have a finished basement. Obviously, if you don't have a finished basement, if you do have a basement, people store things in their basement, and sometimes it's things of value. Oftentimes there is a significant limitation on what is covered due to water damage in your basement. I did actually have this happen to my house one time. There was a storm, power went out. My sump pump was obviously not dead, or not working, and so ended up with 2 inches of water in the basement. So having a water backup covered pretty much all of the repair costs and cleanup from the water scenario. The last item, we refer to this as a scheduled articles endorsement. And what people think of, at the very beginning, we talked about that concept of having um, coverage for your personal property. And there are always a dollar amount within your base policy. Typically, it's 10% of your home value to cover your personal property. But oftentimes, people have special items. This would fall into the realm of art, collectible, jewelry is a big item, cash, firearms, anything to this amount. What a lot of people don't realize is these items typically have coverage limitations within the base policy. So if you have anything that you deem to be of a little bit more extra special value, it's pretty important for you to contact your agent and discuss adding a personal articles or a scheduled articles listing on it. They will actually do an inventory and actually assign an appraised value of something. I'll make one last note on cash. It's not uncommon for people to have cash in their homes. A lot of old school homeowners policies have a limitation of covering $500 in cash. So if you have a significant amount of cash in your home and there's a fire, be aware that that cash may not be covered. Premium reduction strategies for this. Obviously, you probably heard about increasing your deductibles. This is kind of playing that game of being partially self-insured. In other words, how much do you want the insurance company to cover in a loss and how much are you prepared to cover? This is a personal planning opportunity for discussion. Basically, again, if you have a significant or decent supply of cash available or prepared, you can increase your premium deductible, your policy deductible, and that will typically lower your total premium. This is something pretty easy to contact your agent and say, hey, what's my deductible? Okay, it's 500. If I go to 1,000 or 2,000, how does that increase or how does that decrease my premium? Shopping your policy is important. I mean, a lot of people kind of set it and forget it with these things, but every 3 to 5 years, it probably wouldn't be a bad idea to do this. Most companies offer a reduction or a discount if you bundle your homeowners and auto policies together. Other discounts apply if your home has a security system or certain types of home improvements that might have to do with fire, earthquake type prevention, things of that nature. You may also see other discounts for non-smokers, setting up an auto withdrawal for your premium, paperless statements. Certain professions such as teachers, firemen, sometimes those guys have policy discounts, military as well. So you might want to make sure you ask your agent about other potential discounts that may not be readily available or known right off the bat. I'm going to turn it back over to Kathleen for our auto discussion.
Great. So on auto insurance, just like the homeowner's policy, there's some basic coverages. So personal liability, just like the homeowners, this is your liability for any accidents and things that may happen to others. Next line would always include some sort of medical payments for others. The uninsured and underinsured motorist in some areas of the country, these are actually required, or at least a really good idea to make sure if the opposing party in your accident was the cause of it and they are not insured. Then we have your basic collision, and that is literally a collision of the involved in an accident, a car accident or truck. And then comprehensive, all the other items such as trees falling on your vehicle, high winds, vandalism, hitting a deer, all those other types of comprehensive coverage. So planning opportunities around auto insurance, keep in mind, you don't want to duplicate something you may already have covered by a service like AAA. If there's roadside assistance, well, there's no need for you to pay for it in your own policy. Or vice versa, you can get it in your policy and not purchase the AAA. If you rent a car, that's often part of your auto policy. Make sure it's enough coverage. So this is one area where we'd suggest you spend a little. You don't want to be in a situation where a rental car is damaged and you're not adequately insured. And then if you ride share for your employment, such as Uber or you're a DoorDash driver, check your policy. These are employment type uses of your vehicle, and they may not be covered by your general auto policy. So let's take a look at a couple of items that you could use to possibly reduce your premiums. So this will be a common theme. Like Rick said, shop your policy. There have been significant changes in very recent times. So it may be time to take a look. I know we get complacent and no one wants to shop for insurance, but it can be a good cost savings for you. And then also, like homeowners, you can increase your deductibles for the comprehensive and collision portions of your policy. And then take advantage of potential discounts. And not all companies are the same. So this is where you really have to ask your broker. For example, you may have safety discounts. So if you have a clean driving record, if you've taken a driver safety course, you can sometimes turn in a certificate. I recently had changed insurance, and they offered at the beginning to do GPS monitoring through an app on my phone where they would kind of watch you electronically to see what your driving conditions were like and get a certain amount of discount from that. Take a look at, see if you can qualify for any discounts by belonging to certain professional associations, or if you're in a loyalty program, you've been with your company for a very long time. A lot of people forget to say, well, say you're retired and you're driving your vehicle less than you ever have, or now you're working for home and you didn't used to, you may get a low mileage discount. And then again, like with the homeowners, look at an opportunity to bundle that policy with your auto to reduce your premiums.
Liability coverage. This is a separate policy than your homeowners and auto. It does coordinate with the liability coverage that you have. Did I skip one? But no, here we go. So basically, as I mentioned before, you will have a basic liability structure within both your homeowners and auto policies. But this is an added layer of protection on top of that. Typically, the auto and homeowners are limited to, say, $100,000 per incident or 300 combined. But the issue here is that typically we see liability coverage go up to as much as $100,000. And again, this is protection from litigation, whether it's your fault or not. This is going to be a very valuable coverage. And I think of this not just from the financial standpoint of having the financial backing. I actually had a personal experience once. I used to have some rental properties at one point in time, and I had a tenant decide to sue me saying that he fell off his back porch. And of course, it was my fault because he fell down. What was interesting in that whole thing was I immediately contacted my insurance company and asked about the liability. They basically said, we'll handle it from here. I didn't have to do anything. And what I had was the full resources of the insurance company's legal department. And before I knew it, I got a phone call back and they had gotten the case dismissed on a technical issue. But the true value wasn't necessarily the dollar amount that I had in protection. It was the legal resources of the insurance company. They really don't want to give up their money. So they will definitely fight for you in this capacity. As far as benefits, I mean, it's not a requirement to have this in addition to your others. Typically, it does just provide an increased level of financial protection. And as I just mentioned, it really gives you access to the insurance company legal team. And that really, to some extent, can be the true value in this policy, not so much the dollar benefit, but the insurance company and their legal team. As far as planning opportunities, the big question here is typically how much do you want to be covered for? A lot of people will pick their net worth as a target. Like I said, most of these add-on policies for liability, in addition to home and auto, will start at 1 million and go up. They're typically not that expensive, but you want to make sure you're covered appropriately. So discussing your needs with your advisor, your agent, is a good idea. And also, too, these policies typically do need to be coordinated with the liability limits on your home and auto policies. If you want to kind of think of it, the liability protection in your homeowners and auto policies are the deductible for this policy. So, in other words, if let's say, forbid you actually had a judgment against you for $500,000, the $100,000 coverage on your homeowners policy is going to pay first, and then this policy will pick up the other 400. So they do need to be coordinated. Again, they don't necessarily need to be from the same company. You can have a different company covering liability than covers your homeowners and autos, although you may, as we mentioned before, get a pretty good discount or a significant discount by bundling all of these policies together with your same company. So that was a quick overview of property and casualty coverage. How can we help as a financial planning firm? Obviously, the biggest thing we can do is just run a complete analysis on your property and casualty needs. We can provide a review of your current coverage and begin to identify gaps in some of the areas that we mentioned. The biggest thing that we want to make sure that is in place is the appropriate coverage for your personal situation. So identifying gaps and shortfalls in current coverage and identifying potential premium reduction sources are really what we can do. We have a whole group of softwares that can basically help provide an analysis for this and a written report on the whole thing. Obviously, we don't sell property and casualty insurance. You would be going back to an agent to actually place a policy, but we can act as a person on your behalf to review all this. If you're a current client, you can obviously contact your advisor and upload your current policies to begin that review process. And then we can also send the report to you and your agent to list with any specific questions you might have. So we encourage you to get in touch and do it. I know sometimes property and casualty is kind of a ho-hum, boring kind of thing. It's kind of in place, but everyone kind of lets it sit. And so updating and reviewing it every 3 to 5 years is pretty important. So, Kathleen, do you have anything else to add before we wrap this up?
No, I think that's it, but we do encourage you to reach out to us. We really do want to be a resource for you.
Okay, and with that, we'll say goodbye and happy shopping for your homeowners policy.